Welcome to SuperCrowd24, the biggest impact crowdfunding event of the year. We are so grateful to our sponsors who make SuperCrowd24 possible. Funding Hope is a new SEC-registered FINRA member crowdfunding portal focused on helping social entrepreneurs and community builders find and attract impact investors. Halyard Compliance is a firm specializing in regulation crowdfunding compliance for portals and issuers. Purpose Rounds is transforming customers and communities into owners and advocates. We're grateful to our supporting co-hosts, including Rotary, the American Independent Business Alliance, Ridgecrest Herbals, Crowdfund Capital Advisors, and Move the Needle with Rob Kaplan. We're grateful to all our co-hosts. The Brainchild Company, the Caribbean Community of Venture Capitalists, Community Vision Solutions, CrowdMax, Crowdfund Better, Crowdfund Holdings Innovators, Crowdfund Main Street, the Crowdfunding Professional Association, Dakin Capital, DealFlow's Reg A and Crowdfunding Conference, The Gig Group, Incolo, Connect Capital, Kings Crowd, Cougarand Capital Holdings, Mashup Lab, the National Coalition for Community Capital, Neighborhood Economics, Pre-Round, Quantably, Raise Green, Raises.com, Utah's SBDC, the Social Impact Level Up Podcast, the Casson Group, the Local Crowd, the Mill, the Main Street Journal, the 10K Project, the University of Maryland, Baltimore Graduate School, and Weconomy.us. We have 100 speakers at SuperCrowd24. A video presentation of this group giving them each 1 second would require almost 2 full minutes. This event is packed with information and inspiration. We'll record it so you can come back to view what you miss. On April 24th, please join us for our SuperCrowd Hour webinar, Contributing to Positive Peace Through Impact Crowdfunding, featuring expert peace builders. You can sponsor our monthly webinars, our SuperCrowd Hours, for as little as $50 each. We have SuperCrowd Chicago coming up on June 12th. Register at 4sc.fund/CHI with the code SUPERCROWD to save 30%. You can sponsor this in-person event for as little as $500, and the max impact sponsorship is just $2,000. As you know, I host the twice-weekly streaming television show Superpowers for Good. Join Bill Gates on the list of guests. You can apply at nom.s4g.biz. You can advertise on our streaming television program starting at just $295. Visit adrates.s4g.biz to learn more. You can also advertise in our Superpowers for Good newsletter for as little as $25. Visit newsads.s4g.biz to learn more. You want to learn more about advertising with us? Schedule a call with me at s4g.biz/adcall. I also have just finished a new book, How to Make Money with Impact Crowdfunding. Pre-order your copy at 4sc.fund/TLC. Now, let's get started. All righty, everybody. I am thrilled to be here, thrilled to have you all here. I've got, let me stop sharing for 1 second. We've got a great session planned for you this hour, and I'm really grateful that you are all here for this. We have our opening keynote speaker for this session will be Matt Warnock, and Matt is someone I've known for, golly, Matt, I think it's 25 years now. It's been a minute. It's been a minute. Right. And we are really fortunate to have you. Let me just take a minute to formally introduce you to this group that may not know you yet. But Matt is an enthusiastic second-generation owner of Ridgecrest Herbals. He took over the company in 2000, drawn by a passion ignited while assisting his father. Married to Carol with 3 daughters and expanding family branches, Matt lives by the motto, if we're not having fun, we're probably doing it wrong. Matt is also an active angel investor, and we're thrilled to have him on the show tonight, or on the program. Matt, take it away.
Thank you, Devin. I'm thrilled to be here, and thank you for hosting such a fun event. This has been great. Um, I want to start by asking a kind of a simple question. What is the social responsibility of a corporation? There are two primary competing views right now. One of them is called shareholder capitalism, and that has been around for about 50 years now, or probably a good deal more, but at least under that name. And the second is called stakeholder capitalism. And both of those things get a lot of ink. And as uh, as I've looked at them over the last few years, it seems to me that both of them have advantages, but also some pretty serious disadvantages. And one of the things about science is that as we learn new things, we need to come up with new theories to kind of make what we know fit into our world. And so today I want to explore those two models, what works about them, what doesn't work about them, and why we need to find a new approach. Let's start with shareholder capitalism. In 1970, the Nobel Prize winning economist Milton Friedman wrote a very famous article for the New York Times. It was entitled A Friedman Doctrine: The Social Responsibility of Business is to Increase Its Profits. Friedman argued that because shareholders own the corporation, only they can decide its purpose. And since shareholders are only interested in profit, Friedman argues, the corporation's only social responsibility is to increase those profits. Well, his logic is flawed in a couple of ways. First of all, people have lots of legal, ethical, and social responsibilities. Friedman admits that much right there in the article. Secondly, it should be obvious that corporations are directly or indirectly owned, operated, and managed by people. And they can only act through people. And all of those people have those same messy legal, ethical, and social responsibilities. Point three is that people can't avoid their ethical responsibilities just because they happen to work for a corporation. It's no excuse to say, I was just doing what I was told. That has never worked, not in wartime, not in criminal trials, not in corporate America. So, to me, it seems like the inevitable conclusion is that corporations have exactly the same social and ethical responsibilities as the people who run them. And it's just plain false to pretend otherwise. Now, I wrote an article talking about this a year ago, and one of the things that I said in that article was that people prefer to do business with people that they know, like, and trust. And given that fact, it is always in the best interest of a business in the long term to do the things that will make people know, like, and trust them. But there are lots of times when people will have differing views. One of the things that I have tried to, in trying to explain what the duties of a corporation are, to me, a corporation is just a creation. It's a legal fiction. It's a legal person, if you will, but it is something that we have created to do a particular job. And because it's just a legal fiction, it doesn't have moral agency. It can't decide things for itself. Everything about that is determined by the people who are in that corporation. And so, for example, in that respect, it's kind of like a ship. A ship doesn't have a particular moral job to do. Its job is to hold out the water, protect the people who are in the ship until it gets to its destination. But what its destination is determined entirely by the people who are in the ship. We have the same kind of thing in a corporation. We have owners, we have directors, we have uh, a management team, we have employees. All of these people are acting on behalf of the corporation. They're deciding where this corporation is going to go and what it's going to do. But saying that a corporation has no moral responsibility is like saying that a ship has no moral responsibility. Yeah, that may be true, but all of the people who in it are do have those responsibilities. And just because we happen to be in a ship doesn't mean we all get to play pirate. So, what do we do when the people in the corporation disagree? Well, that's one of the things that, interestingly enough, we've had a lot of case law about. There's a French saying that says that whenever you get two Frenchmen together, you're going to have at least three opinions. My experience has been that's also true of angel investors, and it's also true of investors in any corporation you want to name. There are always differing opinions about what's the right way to proceed. Let's consider a couple of examples. In 1919, Henry Ford was the majority shareholder of the Ford Motor Company, and he ran it pretty much as he chose. There were a couple of minority shareholders, the Dodge brothers. The Dodge brothers, yes, those Dodge brothers, um, had invested in the corporation, and for years they had drawn dividends, and they were enjoying those dividends. They were hefty. But Henry Ford had social goals that he wanted to pursue. He wanted to put an inexpensive car in every garage he could possibly manage. He wanted to pay his workers fair wages. Um, the Dodge brothers were not interested in those social goals. They were interested in getting as much money out of the corporation as they possibly could. And in fact, they wanted that cash so that they could create a competing car company, which they ultimately did. They sued Henry Ford to make him pay dividends. And that case went all the way to the uh, Supreme Court of Michigan. And in that decision, the court agreed with the Dodge brothers and said Henry Ford did have to pay dividends. So that's a case where we had a majority shareholder whose views were different than those of minority shareholders. And because we've had those kind of disputes for a long time, we have a whole body of law around that kind of thing. But majority versus minority is not the only kind of things that shareholders have disputes about. Another really common one is the same kind of thing that happened in that case, and that is the difference between short-term and long-term views. Founders like Henry Ford tend to want to invest in new markets, new products, new factories, all kinds of long-term investments that may not pay off for a very long time. Think, on the other hand, of a day trader. Does a day trader care what the market is going to be 5 or 10 years down the road? No. They're only interested in what the stock looks like today and whether it's overpriced or underpriced and what kind of a margin they can make on it. Short-term versus long-term is a real dispute that management teams deal with every day in the course of operating the company. For example, we're currently seeing a lot of trouble with Boeing. And in that case, it looks like they have been neglecting some long-term important things in favor of short-term profits. And that's gotten them into trouble. Finally, there are some differences between ownership and other kinds of relationships. Between 1998 and 2000, I was working with a public company doing some mergers and acquisitions. And they were using their stock to purchase these companies that they were rolling up. And that worked really well up until the time that they were attacked in what's called a bear raid by short traders. Now, short traders are folks who think that a particular stock may be overvalued, or at least that they can make a profit on that on the notion that that stock may be overvalued. And so they will short the stock, often with a very concerted rumor mill, trying to get people to lose faith in that stock so that they can make a profit on it. In theory, it's fraudulent. It is very hard to prove and very hard to prosecute. And as a result, people tend to get away with it. In a lot of countries, it's not even legal, but we allow it here in the States. And in that case, it happened. But my point here is that people who are shorting the stock have very different interests than those who are invested in the company and trying to help it grow. So all of this is to say that the interests of shareholders are not nearly as monolithic and universal as Friedman assumed. Almost as if in response to Friedman's article, Klaus Schwab of the World Economic Forum started writing in 1971 about a concept called stakeholder capitalism. And in this model, he said that a corporation needs to balance the interest of shareholders with other stakeholders, including customers and employees and suppliers and regulators and the community and public at large, the environment, all of these kinds of things. The glaring problem with stakeholder capitalism is the term stakeholder, which nobody knows what it means. It's catchy, but it's kind of vague. It suggests a sense of ownership, but it doesn't provide any clear details or definitions about what that interest looks like. One concrete example that he does give of stakeholder capitalism is that, according to Schwab, German companies often have a representative of their labor force on the board of directors. Now, it's generally accepted in corporate governance that it's a bad idea to have the CEO of the corporation on your board of directors because there's a possible conflict of interest there. Well, guess what? If you've got labor there, you have exactly the same conflict of interest. And if the company is using union labor and collective bargaining, then the inherent conflict is even more obvious and more problematic. But let's extend now that concept and say we put board representation for the other stakeholders like customers and suppliers and the local community. Well, that means that when you go to negotiate with those folks, they're already sitting on your board as insiders. That makes it really tough to do those kinds of things. So to me, it seems to me like there are really fundamental problems with this idea of stakeholder capitalism. In addition, we have to look at where it comes from. The World Economic Forum is where academia and big business and big government all get together to talk about how they ought to run things in the world. If that worries you, it certainly worries me. And the simple fact of the matter is that innovation never comes from the top down. It always bubbles up from the bottom. Henry Ford was not an existing automaker with deep pockets when he started out. The Wright brothers ran a bicycle shop and built airplanes in their spare time. Clayton Christensen talks at some length about this, and he explains that innovators are always cannibalizing and overturning and upsetting markets. They're always the enemy from the status quo. And so if there is something new coming down the pike, I believe that that's going to come from the ground up, not from the top down. If there are good ideas in the world about how to run the world differently, I don't think those ideas are going to come out of Davos. I think it's going to be somebody in their basement, like the entrepreneurs that we've been hearing from. Alan Kay, the great futurist, once said, the best way to predict the future is to invent it. So if shareholder capitalism has problems and stakeholder capitalism has problems, what's the answer? To me, I think it's that Milton Friedman was a lot thought he was. He actually didn't have any objection as long as they were imposed by the companies themselves. We need to get smarter. We need to be more human in our approach to capitalism. And I'll leave it right there. Devin?
Thank you so much. That was such a fascinating discussion. I think, I hadn't ever quite thought of the Davos in quite those terms, but big government, big corporations. Who else did you point out is there? Anyway,
Academia,
academia. Yeah,
which
what could
is
go
typically
wrong?
funded by big government, right?
Yeah,
So,
yeah. So what could possibly go wrong? Yeah, I think it's a fascinating topic, and the this discussion is so worthwhile as we talk about you know the responsibility of corporations as representatives of human beings. That is a profound insight. I appreciate you sharing and reiterating that. You've given us a lot to think about, and appreciate you very much being here today. So thank you, Matt. I appreciate that. We're going to shift gears now and pause for just a minute to give away a little bit of money. We're giving away another $100. This one is funded by Halyard Compliance, one of our sponsors. This micro grant is the rules are simple. To get this $100, you have to invest in one of the 10 companies that pitched at SuperCrowd24. We'll reimburse you $100. You can invest more if you want, but we'll reimburse you $100. We hope we're excited to do this. And Chandon is pulling the winner up. Chandon says the winner is Chris Zusin. Chris Zusin. Chris, congratulations. You have been attending session after session. Chris, I've seen your name and seen your face in almost every session. Thank you so much. Congratulations. You earned that the old-fashioned way by showing up. So thank you very, very much. And congratulations. We'll be in touch with you to coordinate the details on that. Now it's my special privilege and honor to introduce Jennifer Eden. As I mentioned, I like to think I'm a member of her tampon tribe because I invested a tiny bit in her last round. Jennifer is the co-founder and CEO of Tampon Tribe and is an awarded international marketer and seasoned entrepreneur who successfully founded and exited businesses in Beijing. With a dynamic background as a live news anchor and journalist in Australia and China, Jennifer excels in high-pressure decision-making. She holds a degree in communication and marketing from Charles Sturt University with a triple major in economics, politics, and sociology. Jennifer, take it away.
Hi, Devin and everybody. Thank you so much for having me. I'm actually just going to share my screen to give a little context to what we're talking about today. So give me 2 seconds. I hope you can see that title page there. Right. So as Devin mentioned, I'm Jennifer Eden. I'm the co-founder and CEO of Tampon Tribe. So today I'd like to take you on a bit of a journey through the crowdfunding campaigns that helped us build our company literally from the ground up. So the way I'll run it is basically we'll explore not just what we did, but how we did it, what we learned, and how each campaign has really shaped our approach to business, and kind of echoing a lot about what Matt said, with the community building and the impact part of the company. So Tampon Tribe, as the name suggests, is a period product company. We do organic and plastic-free period products. We actually do this in 4 verticals. So we do direct-to-consumer, we do B2B, we do wholesale into retail, and we also do Amazon. And how it all started was actually an Indiegogo campaign. So this was our first attempt at crowdfunding in 2016. And we had high hopes for this one. We actually raised $5,864. Now, that might seem like a small amount, but actually it enabled us to start the company. And what it also enabled us to do that is so important and has been echoed throughout the last 2 days is the importance of people in shaping your products and in shaping what you're building. So during that campaign, we actually changed a lot of our products and our iterations, and I can dive into that more if we have time at the end of my presentation. Moving along with that, that enabled us to get our website built and to bring in some stock. And then we started our first, I guess, real campaign, and that was on WeFunder, and we were one of the first companies to work with the Reg CF raise. And this campaign was really born out of a passion to provide a product that we tested on Indiegogo and found that was desperately needed in the market. And that was 100% organic cotton period products without any plastic. So we've been driven by mission from the very beginning, but we still had a lot to learn about the world of crowdfunding, as did a lot of people at that stage. So what really worked for us was community engagement. So we connected with our audience by sharing our story, why we cared, and why they should too. And it wasn't just about selling a product, it was about promoting a lifestyle change. Also really successful in this first raise, because we hadn't really had a company at this stage, it was just an idea, was our transparency. We were open about our challenges, and that really resonated, we found, with people. And the authenticity remains to this day. What didn't work so much? The resource limitations. We grossly underestimated the resources needed for a successful campaign and the management of it. So the demands on our time and the manpower were much more than we anticipated. However, it did still result in a very successful raise for a little company. And we learned from there that transparency wasn't just beneficial, it was crucial. So our backers really appreciated being in the loop, even if the news wasn't great, even if we needed their help. And the importance of really robust planning cannot be overstated, particularly when it comes to building a business and the resource allocation needed. So our second WeFunder campaign really built on the first, and that was more successful. You could see we, raised 196,000 on this one, which was exactly what we were going for. That was our goal, was 150,000 to 200,000 on this raise. We didn't want to overcapitalize. But what we did differently with this raise is we really leveraged data. We did a really great, deep analysis where customers and backers were coming from, what messages resonated with everybody, and what got people engaged, how many emails got open, how much people pledged from each email, from each social media message. And we also did it with building a stronger community. So this time around, we did a lot more events. We got our advocates and our backers and our community together. We spoke more at forums, and we participated a lot more in, I guess, the social media groups and networking. What didn't work? I guess we probably overpromised a little bit. We were really, really ambitious. So when any delays took place, either in the fundraising or in our product iteration, it tested our backers' patience and trust, but coming through on those promises also really yielded great results for us. So I guess my tip from the second one was perhaps to underpromise and overdeliver. So really ensuring that we could realistically meet our commitments moving forward, and just also to always continue to build the community like we're doing here today. Our our most recent campaign, also via WeFunder, was a lot more refined. And that was enabled through a few reasons. We had a really successful run from 2018 from that raise, and that carried us all the way through to 2022, which we're really, really, really proud of. We're a very lean company. Myself and my co-founder really pride ourselves on running a profitable business. So I know that can be a little different in how people run things today. But our third campaign, netted a 115,000 for us. And we did it in a much more sophisticated way, I'd like to think, because we'd already added products, we'd already really expanded our work in B2B, in Amazon, and our private label. I think that drew a new group of investors. And of course, our profit was increasing and our revenue was increasing. So suddenly we became a lot more attractive. We did that a lot through feedback loops. So we actively sought out and implemented feedback from our backers, from our investors, and from our community, which enabled us to craft products and also our community's loyalty on the way. And this really came into this campaign. In terms of planning, we were much better prepared this time around. We had a professional look at our page design, help us with structuring everything. And when I look back, even at our little Indiegogo campaign, which I'm super proud of, to be honest, done on a shoestring, it was really nice to see that evolution of the company from our humble beginnings, all the way up to the campaign that we ran most recently. We also had, a lot of our questions answered in that. And however, we had new challenges in this campaign as well, like particularly in the market. When we started, there were very few eco-friendly options in the period product space. There are a lot more in that space this last time around. So really articulating our differences became a challenge that we overcame, but something that we hadn't thought of before, so that really forced us to create some new strategies to combat greenwashing in a lot of the market, and also look at our niche targeting when we were reaching out to investors. And we learned a lot in that. Particularly that constant innovation is not optional, it's necessary. So staying ahead of market trends and really continuously improving were paramount to us. Engaging the community, of course, in product development. And that really gave us crucial insights, which saw us end a very successful campaign last year. And also, one thing that we're all talking about and has been discussed, yesterday and earlier today, how a crowdfunding campaign and funded company creates an entire community-driven brand. So community, as our name suggests, has always been part of Tampon Tribe. That was very much how we started. And we embraced the crowdfunding ideas from our backers. I still speak to a lot of our original investors who may have put in $100 and then $1,000, maybe even $50,000 in the last round, but they just started by believing in us. So I have calls up until this day with people who jumped in really early, and we continue to evolve as a company because of that. And we really became a driver of social change. We advocate daily and hourly with our products for sustainability, for health, for transparency. And this community of our community purchasers, of our B2B clients, and also of our investors enabled us to become a very powerful voice for this reimagined personal care that we now are in the middle of really growing rapidly as we head from a 7-figure to an 8-figure company. I wanted to give some crowdfunding marketing tips as well. I know a lot of people have done this over the last few days, but after having these successful campaigns, I just wanted to touch on a few of them, and hopefully they'll help. Of course, when you're crafting your crowdfunding story to be captivating, make sure you include, if you can, the origins of the company, why you started it. We started Tampon Tribe from a personal journey of making something better for health and people going through endometriosis, as well as, looking at the sustainability and the responsibility we have as founders to make sure that we eliminate single-use plastics from the planet. So our journey was really important. And everyone has a journey. Even sometimes when you sit back and think, I don't know if mine's that relevant or that important, it is. People will resonate with that. Also, your purpose. What are you achieving with this brand that you're building? There's the profit side. It's very important. And Matt just touched on that too. But what's your purpose? What's your impact? What's your responsibility? And of course, your vision on how to get there. For us, the real true power of crowdfunding is in the company to this day, building community. Such an important thing. And you can do that just when you start to ideate product, listening to customers, do an Indiegogo campaign or whatever is around today. I don't know. I think it's still around. Listen to your customers' feedback in that campaign, grow your products from that, and then share your story. Like particularly today, when you're pitching your features of your product or your service or your software, people connect now with authentic narratives. And, you're looking at TikTok and Snap and Instagram and all these great ways. You've got a tool in your pocket with a smartphone or a computer that you can use every day to really forge these deeper emotional connections. When you're laying the groundwork out for your campaign, make sure you do the hard things. Build your email lists. I know it's boring, but do it. Makes a huge difference. Involve a lot of early adopters. There are people on the sidelines of your company wanting to try the product, wanting to be advocates. Get them involved in the process. We have to step back from ego and arrogance at this stage and start pre-marketing. And I think this is something that probably everybody knows, but sometimes we forget when we look at our own product, is start that awareness campaign way before you start your crowdfunding campaign. Once it's up and running, of course, optimize your campaign's reach. As I mentioned, social media, it's a no-brainer. It doesn't even cost any money. It's just your time right now. Partner with some influencers who are aligned, not just in the crowdfunding space, but in your product space. And of course, old school press and media. Don't forget about them, as they're there as well. And they're wanting to share your story. And finally, I just wanted to touch on some qualities that you might be thinking about adopting if you don't have already when you embark on a crowdfunding campaign, and that's a crowdfunding mindset. So being adaptable is such an important trait to have, to be able to pivot when you see something's not working. I know we had some of these great ideas. We were going to put, campaign A into motion. That was going to do it. And then when it didn't, you're like, wait a second, we have to pivot really quickly. Not a lot of us, when we go into crowdfunding particularly, have a ton of marketing dollars. So make sure you can pivot quickly. Be tenacious. Tenacity is everything. You're going to have those setbacks and disappointments, but just keep moving forward with really unwavering determination. Humility, I think, is super important. Staying grounded, acknowledging your limitations and asking for help, and being really open to outside perspectives. So if you feel like reaching out to me in the future, I've got my contact at the end, then drop me an email. I'm happy to jump on a call if you're wanting someone to help you through. As I said, we've done 3 crowdfunding and I guess 4 crowdfunding campaigns, 3 with equity crowdfunding and 1 with product. So I'm more than happy to help there. And be patient. Maintaining a long-term outlook while really diligently executing incremental steps. Easier said than done, but we found it, building a company to this level, absolutely crucial. So I'm just going to drop my contact there on the screen. Please give us a follow too on social media, which is just at Tampon Tribe. You can reach out to me there. My team will send a message through, or at any time. We're a community, so I'd love to help. That's it for me. I hope that was helpful, guys.
Thank you so much, Jennifer. I really appreciate you being here. It's just an exceptional opportunity to hear from you. You've been so successful in this space that I'm thrilled to be able to share your story with more people. So thank you very much for making the time for us.
My pleasure.
All right. We are excited now. We're going to move on to our next part of the program, which is kind of an exciting thing. We've got a great panel lined up for this discussion. Justin Renfro is going to lead this discussion. Franz Hochstrasser is also here with us, and Kathy Key from WorldTree. They'll be talking about crowdfunding for climate solutions. And this is one of my very favorite topics in the whole world. Lynn Heller, as I mentioned, she's on the program. I'm so sorry. She is at the emergency room right now with a family member. And so our thoughts are with her. But we're extremely grateful to this great panel. And let me just take a minute and introduce Justin to begin, and then I'll let Justin and the team handle the rest of the introductions. But Justin is an expert in early stage fundraising, currently leading the revenue-based financing initiative at WeFunder. He has mentored hundreds of startups, offering critical insights into securing funding and successful founder mindsets, specializing in crowd-based fundraising strategies. He's a great human being. I'm thrilled to call him a friend. Justin, take it away.
Thanks, Devin. It's an honor to be here, and I appreciate you having us. I'm really excited about this group of people. To kind of start us off and give a little bit of framing, crowdfunding for climate solution. There were kind of a couple themes for me in thinking through it. I actually spent 5 years at Kiva. So I was at Kiva for 5 years and WeFunder for 5 years. So kind of looking at it across the nonprofit to the for-profit spectrum, I think that there's a lot of variety in kind of how crowdfunding can work, in a for-profit model and a nonprofit model. In the 5 years that I've worked at Kiva, it was all of the financing was 0% interest loans. There was no variance on the structure. But at WeFunder, there's a lot of variance in the structure, and founders can utilize crowdfunding through different financing structures. So that kind of waterfalls into kind of like, what are the creative applications around structure for climate companies that raise capital? I've seen a lot of different examples of that at WeFunder, and I'm excited to learn more from Kathy and Franz on what they've seen and what they've experienced. So with that, I would love to start with introductions on both who you are and the company that you're with, and kind of why you're on this panel. Kathy, why don't you start?
All right, great. Hi, everyone. Really pleased to be here again. Thanks, Devin, for the invitation. My name is Kathy Key. I'm the president at World Tree. Just to kind of get you located with the accent. So I live in Canada. I lived in Canada for 20 years, but I am English. And World Tree is mostly based in the United States, Costa Rica, Guatemala, and Mexico. So truly an international flavor. The company that I am president of is World Tree, and we're an agroforestry company. We grow trees for the purposes of carbon sequestration, creating healthy ecosystems, and also to generate revenue through the production of sustainable lumber. And we've done a lot of crowdfunding both in Canada and the United States. And I think, Justin, we've been on WeFunder 4 times. I think 4 is the right number.
Dating back almost a decade.
Yeah. And I believe we were the first female-founded company to raise more than $1 million on WeFunder. That's our little claim to fame.
Yeah, that's a worthwhile pat on the back.
Is that enough intro, or do you want a little bit more about what we do?
No, that's perfect. I think that's a great starting point. Franz, why don't you share kind of where you're coming from?
Wonderful. Well, thank you so much, Justin and Devin, for having us. Great to be with you all this evening. My name is Franz Hochstrasser. I'm the founding CEO of Raised Green and former board chair for the last 6 years. I recently exited the company, but I believe actually that our current CEO, Jackie Logan, has spoken earlier in the program and is also perhaps with us today. So shout out to Jackie for keeping things going and growing. So I founded Raise Green about 6 years ago. Prior to that, I spent 9 years working for President Obama on his campaigns for president, and then ultimately at the U.S. Department of Agriculture, the White House Council on Environmental Quality, and the U.S. State Department, working on climate change policy primarily, but also finance. And when I came out of that experience, really felt like there was an opportunity to use crowd investment as a vehicle to fill a particular gap in the climate finance ecosystem, specifically for, at that time, commercial and industrial scale solar. But now I think as we've proven out with Raise Green and using crowdfunding and Reg CF for many, many different security types and many different company types, Raise Green now uses crowd investment for everything from clean energy projects to green bonds with folks like the Connecticut Green Bank to actual climate tech companies. And we also did a raise. I raised around on WeFunder. So we're a fellow alumni and good friends with the WeFunder folks. But that's my background, and currently providing various consulting services to a handful of folks in the Greenhouse Gas Reduction Fund and Green Bank ecosystem through a new channel. But thrilled to be with you all.
Yeah, thank you. It's that's a wealth of kind of experience to pull from, looking at it from a regulatory standpoint, a White House standpoint, a platform standpoint, and a consulting standpoint. You've probably, Franz, seen a lot of cool examples. And I really want to kind of pull it to earth a little bit and be like, what's one example, one story, one company, one fundraise that you thought was like world class? It's like, I wish it could always be this perfect. All the stars connected, and it was a great outcome for all involved. Could you kind of walk me through one of your like pet projects that checks all the boxes?
Absolutely. Yeah. Thank you for the opportunity. Actually, I was texting with Lynn Heller about an hour ago as she was heading into an unfortunate family illness. And she actually asked me to share the story of the Henderson Hopkins High School project, which we worked with the Climate Access Fund to crowdfund. And ultimately, that to me was the pinnacle. I like to call it the sort of charismatic megafauna of clean energy projects, because it wound up being, the absolute dream of circumstances. So that project it's a high school in inner city Baltimore, East Baltimore. It's a 98% Black community, and Lynn Heller and her co-conspirator Suzanne Kim worked with us at Raise Green for almost 2 years to work toward getting that project pieced together in the capital stack. So they wound up getting a bunch of philanthropic grants, but they wound up also using Raise Green to crowdfund about a third of the project capital costs. And that project is a rooftop solar project, 800 kilowatts, 100% community solar and 100% LMI subscribers, which means low to moderate income folks are benefiting from a 20 to 25% savings on their bills who subscribe to that project. The project's used as an educational module for the students. And we were able to structure a debt financing for a bit of a bridge loan for that project. And it was also able to capture the value of the Inflation Reduction Act tax credits in the form of the investment tax credit and in the form of a direct pay version of that. So what that means is that rather than having to have a tax equity investor, which is a really complicated thing that's necessary for clean energy projects that are privately owned, it actually qualifies because it's a nonprofit that developed the project and issued the debt and raised the money, qualifies for a direct payment from the Treasury Department for the value of the tax credit. So it's one of the amazing things that Biden's Inflation Reduction Act enables, and we were able to structure the project in a way it was able to capture that. And it's co-owned by I think around 50 crowd investors who are going to be getting payments for the duration of their securities on that project. Major success, and I'm super proud of that one among others. But I'll give a major shout out to Lynn, who unfortunately couldn't make it.
Yeah, that's a cool example. I think the more kind of pinpointed the community, the cooler it is. And I guess there's just different flavors of cool, but I think that a project that's being funded within the community and everyone in that community sees kind of immediate upside is very unique. I suppose to kind of switch gears to Kathy. Kathy, you're it's a totally opposite kind of vantage point of thinking about it almost on a global scale. With your introduction being like, I'm in Canada and this, I have a global scope. Could you talk a little bit about kind of like the community and how you see community? So we see it from a very hyper localized context in Baltimore, and then kind of like, how do you kind of perceive the crowdfunding component and the community component in what you're doing with a global scope?
Right. Okay. So when we created, we run an investment program every year, which we call the Eco Tree program. And inside of that program, we bring in a cohort of investors. So we bring in a group of investors, we collect funds, and we use those funds to plant very fast growing hardwood trees with farmers. And so those farmers, they plant the trees, and then when the trees are mature, and these are super fast growing, they're mature in about 10 years, and then we harvest the trees and we share the profits of the harvest with the farmers and with our investors. And when we first conceived of this idea of the collaboration between these three different groups, World Tree, our investors, and farmers, we realized we were bringing together groups of people that would never otherwise work together. And many of the people who are interested in impact investing, especially climate, people who want to offset their carbon footprint, who want to restore ecosystems, those are people who do not have access to 20 acres that they can just go and plant some trees. Right. So we all know planting trees is good. Planting the right kind of trees in the right way is especially good. But most of us don't have a farm that we can just go and do that on. So this way we get communities of people who are able to contribute to something that then makes a difference with these farmers in completely different locations. And those farmers are then building their communities around the Empress tree. When we surveyed our farmers, we survey them at the end of each year, 98% of farmers, we've got 300 farmers in our program, 98% of them say they involve their community in the farming process, whether that's their neighbors or their church community, their extended family.
Where are these farms?
So the farms in the US, they are in the southern US, so Alabama, Georgia, northern Florida, Mississippi, Louisiana. So the trees love the South. We also plant in Costa Rica, Guatemala, and Mexico.
Amazing.
Yeah.
That is very cool. It reminds me a lot of Kiva because at Kiva, you can invest $25 into a farmer in Kenya, and there feels like this kind of connection point. There is a connection point. You have the opportunity to invest $25 in another human that's halfway around the world that's doing something that you think is interesting, and you want to be supportive. And this kind of like to kind of talk about the for-profit, nonprofit layer there, with Kiva being 0% interest, we saw a unique profile with what Franz was describing. And Kathy, I believe the structure of the World Tree is like essentially, like a 1% interest dividend after 10 years or something. Well, what's the financial structure for World Tree?
Oh, so we have, again, a kind of everything about our business is a little bit out of the ordinary, but
Right.
inside of how our offerings work. So we harvest the trees, and everyone is in a vintage. So we have a vintage of investors, trees, and farmers that are all grouped together. So it's not like you are investing in one farm in Alabama. You're sort of investing in
portfolio
farms, that
portfolio of trees.
Yeah. And then as an investor, so the farmers, when we harvest the trees, the farmers receive 50% of the profits. And then the investors and World Tree, we share the other 50%.
Amazing.
Yeah.
Is there like a target return profile, or is it kind of like whatever, whatever income is generated?
Well, both. I mean, as you know, we're dealing with security. So it's whatever profits are generated is shared. Our target is a 4 times return.
I love that.
Yeah.
Over how long?
Over 10 years.
Over 10 years. Sweet.
Yeah.
Yeah, go check out World Tree. Where can I invest?
Yes.
Wow,
Apparently
4x multiple on invested capital.
Yeah. Wait, is that a 4x return on principal?
Yes.
That's
Cool.
incredible. I want in on that.
Yeah.
Yeah, I want in on that too.
Yeah.
We're going to use this panel discussion as just a pitch of World Tree.
Seriously. Kathy, wow.
Just to get a sense of it, just so that you understand. So you're planting like a sapling. You're planting a small tree to start with. This is an 8-year-old empress tree.
Mm-hmm.
So that is a huge amount of lumber being generated from that one little planting that you're doing there.
Wow.
Yeah.
What are you feeding the trees? Do you feed them more than just like water?
Well,
I thought it was just like water and sun.
I know. Well, I mean, it's an amazing thing with Mother Nature, right? So she produces like these miracles out of thin air, literally air, sunlight, water. Now, depending on where you're planting them, they may need some extra fertilizer, but that's and then many of our farmers, they'll graze their cattle amongst the trees, so you get some nice organic.
Kathy, this is kind of off script, but I think it would be fun to do like an investor retreat in Alabama to just see and talk about the trees.
Wouldn't it?
Could we do something like that?
Yeah.
Is that something we could put together?
Yeah, that would be awesome.
Franz, are you interested in this Alabama tree trip?
Oh yeah, count me in.
Okay, cool. We got a party of 3. Anybody here today is welcome to join. Please email me after the session for details on our Alabama tree tour. Franz, what questions do you have for Kathy about this investment opportunity, the return profile, the structure? Where was your brain going as she kind of explained how it works, and what's going through your brain there?
Well, I think it's an incredibly fascinating model, Kathy. The notion, I would put this kind of in the category of what is often described as nature-based solutions to the climate crisis. And I think that there's been a real sort of awakening around that space of late. I think for a long time, there was a sort of technocratic, tech-first approach to tackling climate issues. There was also a fissure between conservation as an approach and then emissions reductions, which are mostly perceived of as coming from the energy or transportation or building sectors, and not necessarily from nature-based solutions. So the fact that you've been able to innovate a business model in that space and find a rapidly growing feedstock, and a very profitable model at that. It's super inspiring. I love that you're sharing the story, and I'd love to help you get the word out.
Excellent.
I'm sure I've got a handful of investors who'd be interested as well.
Awesome.
But maybe just to further your question, Justin, and to put you on the spot a little bit, Kathy, what are some of the risks involved? And are you seeing those exacerbated by climate impacts as well?
Yeah. So some of the risks. So obviously, as you mentioned, you've got climate risks. So you're working with Mother Nature. You're working with a crop in effect. So you do have climate related risks, which is one of the reasons that we diversify the portfolio of trees, because we don't expect every farm to make it, or even every farmer to be able to follow through all the way through to the end. And we're working with, just like with the on the crowdfunding side, we're working with smaller investors. We're also very often working, or most normally working, with small family farmers. And so you're also relying on them to be able to follow through. And then the other aspect, probably the other on the risk side that I'd put high up there, is that we're bringing a brand new lumber to the market. So this is a new wood. We're seeing trees like cedar, redwood, ash, birch. These are all commonly used commercial woods that are all at risk of extinction. We have to find other solutions, but bringing a new wood to the market still requires a lot of market adoption and conversion. So those are our two kind of big
like regulatory
challenges.
Like regulatory or in that transition of like mass wood adoption of a new species, essentially.
No, it's not so much regulatory as a practical. So if you think about a furniture manufacturer who's using, let's say, cedar, for example, they have all of their equipment geared for that wood. All of their saws, all their equipment, they're all geared for that particular wood. When they transition to a new wood, they need to change all their machinery to match the wood, recalibrate. And so the biggest question we get asked by our lumber customers is, what's your supply? Because we don't want to change everything if we don't have a reliable supply coming from you. So that's been one of our things, is to grow the supply to meet that demand.
That's a fun challenge. Yeah. Okay, cool. Thank you for being in the spotlight for a solid 15 minutes, and you're in the hot seat. But we're gonna transition back over to Franz and Kathy. I also want your perspective on this one, but I'm gonna let Franz go first. I think a lot of people see me as an OG of the crowdfunding world. I've been at WeFunder for 5 going on 6 years. But y'all predate me in this world. And Franz, you were, with Obama, you were likely had some exposure to the Jobs Act and Reg CF, kind of becoming an industry. And, you've seen a evolution over the past 8 years from, okay, cool, we're venturing into this new unaccredited investor world. Now, what does it look like? And, what are some of the insights over the past, 8 years from when this first started to where we are today?
Yeah, I appreciate that question. And full disclosure, I've been working on climate issues for about 15 years, but I did not get involved in securities issues, and specifically the Jobs Act, really until after I had left the Obama administration. I do remember it because as a political appointee, you tend to get the talking points and accomplishments of the day kind of circulated. And I remember it when it passed and when President Obama signed it, and thinking, wow, that's a very cool evolution of the securities industry, and frankly, breaking down the barriers that had existed for 90 or so years, preventing retail investors from getting in on private deals for the most part, was huge. So I think in theory it was inspiring to me as a staffer, and then never thought I would go out and I'll wind up using it as my venture. But yeah, I was just watching the industry grow is pretty astounding. I think that there are those that thought it was going to grow faster, and those that wrote it off entirely. I think and there's mostly stories I've heard from Hill staffers who had named the first bill on the Senate side that was introduced, I think, by Wyden at the time. But yeah, the biggest reflection I have, I think, is just that it is such a powerful idea, and it is such a transformational opportunity that exists in law. And I think the biggest barriers I've seen to adoption are really awareness. And we continue to harp on this at the whole time I was running Raise Green, that if only people knew about this, they would do it. We had, I think, about a 4% conversion rate of folks who would see our page, one of our investment pages, to those that actually invested, which in e-commerce is sort of like off the charts. I mean, there's like less than 1% and I think industry standard in Reg CF is like 1 or 2%. And it was just a matter of like getting people to know that this was a possibility. That was and is, I think, still the biggest challenge. So I think what Start Engine's done with Mr. Wonderful, super interesting, bringing in celebrities. I think WeFunder's been tremendously effective at growing the size of your base and diversifying the types of offerings out there. And as it relates to the climate space, there's now sort of a global movement as well. There's a bunch of international platforms like Trine and others that and Kiva, you as you mentioned, were at the forefront, I think, of doing this before it was even passed in the Jobs Act. So just been humbled and appreciative to be a part of that growth of the industry, and ultimately want to see it grow so much more. I think with the Greenhouse Gas Reduction Fund money of $20 billion announced already, and another $7 billion on the way to de-risk and fund climate projects of all types, solar, wind, heat pumps, hot water heaters, batteries.
Yeah, it's like those incentives create new ways in which founders can structure their campaigns and bring different types of value for different types of investors, different kind of profiles of energy and climate related, financing. It's just like financing strategy is impacted when you have lots of money coming from the government.
100%. Yeah, I think on average, the Inflation Reduction Act money subsidizes climate technologies by about 40%. So it makes them 40% more profitable. And there was a question in the chat, I think from Chris, that was asking about hard tech and the risks involved in hard tech. For a long time, financing climate solutions was held back because it was both a technology risk and like a significant technology risk and a horizon risk, where that these are long duration investments. The project finance still is a 5 to 7 year payback, even for commercialized technologies. But what these bills do, and what these grants and tax incentives from the federal government do, is it really does de-risk this space a lot more. Mm-hmm. And it, frankly, in my view, makes it a lot more appealing for retail investors getting into the sector. And that's a good thing from a climate perspective. It's a good thing from a participatory democracy perspective.
Yeah.
And from a wealth creation perspective.
Yeah. The investors having good economic outcomes propels the industry very quickly. So if there are structures to expedite investor returns, and which is why I love all the debt construction around climate that I see on WeFunder and that I see on Kiva and that I've seen out in the world. It's like, all right, cool. There's innovation in how investors can generate wealth, which I think is very important and highly differentiated from the Y Combinator culture of San Francisco.
Yeah, just picking up on that.
Don't quote me on that.
Well, just picking up on that, you mentioned it. Specifically Y Combinator, and to call them out a little bit, they a couple of years ago had this great blog about how they were going to be, diving in and taking a bunch of climate risk and betting on climate companies. And then if you look at their record now, I think out of like 60 deals that they did last year, they had 2 climate companies. So,
Right.
and yet, the sector has continued to grow despite venture capital pulling back writ large across the board. But climate has been, about 70% of what VC funded last year, which is an alarming amount. So
that is a fun fact.
Yeah,
is that
happy
true?
to share the reference.
Yeah, please put it in the chat. I would love to review that. That is a dynamite kind of signal that that's a very encouraging signal. If climate is your goal, of which it is our goal. Kathy, you have raised, I'm sure you've raised on different platforms. I know you've raised many rounds. You have thousands of investors. You started very early, before I got to WeFunder. So what have you seen in the evolution of crowdfunding, for WorldTree, since from 2016 till now?
One of the things that we've seen is in the early days, when you fill in all the platform boxes and there's a form you fill in to say who you are and where you're going to land in the search results, there was never a category for us. Sometimes you'd see climate tech. Well, we're not climate tech. We're nature-based solutions. We're not climate tech, but it's the closest we can get. Now on WeFunder, there's a section there that we fit in the sustainable solutions. If you look on KingsCrowd, there's, if you go to the search engine on KingsCrowd, you'll see you can filter out for social and environmental impact. So we've seen those changes. The other change that I think is really interesting is that in the early days, for us, we were told by people that if you crowdfund, you will put off other types of investors. So the family offices, the institutional investors, the larger investors kind of look down at the crowdfunding. So that it was always like, so that was the message that we got. And I think that was true, and I really think it's changing a lot. So we found as our companies evolve, I don't know how we would have done what we've done without the crowdfunding side of it, because it takes a certain type of person to go, you know what, this is new, it's different, but I'm really intrigued. I'm really intrigued by the impact I can make. And so I'm going to put some money into this. And that sort of first of kind thinking that we've seen from our investor base has allowed us to plant 300 tree farms. And those 300 tree farms have allowed us a real proof of concept in 5 different countries in total. We've figured out all the logistical things, the growing, the genotypes. We've got teams now in all those countries. We've proven out our model so that now we're getting those larger investors, these institutional investors who are looking at us and going, hey, these guys have got 8 years of research. They've got data on these trees. They know what they're doing. They're proving out their model. They've been building the market.
Yeah.
So we're now at that sort of pivot point where we can start doing larger checks and larger projects.
That's good. We like that.
Uh-huh.
It's like use the crowd to bridge you to institutional capital, and good on you for that 8 years of, patience is underrated. I'll tell the group that, it's like, all right, cool. The fruits of the
Yeah.
labor, let's go.
Yeah. And
I think
we're still doing both. Because our roots are with the crowd. So we're still
right.
doing both. Yeah.
Right. It's the crowd becomes a part of the mission almost.
Yeah. Yeah.
Yeah. We appreciate that. That's what we preach. Franz, were you gonna add to that?
Yeah, well, actually, I was going to get in. I don't know if you saw there's another question in the chat directed at you, Kathy, about have you explored the risk of monocultures, diseases, infestation, acute climate events to investors, especially in this stock is closely planted?
Yeah, great question, Chris. So it's a very specific World Tree kind of question, but obviously over 300 farms, yes, we've done a lot of research. And obviously, we don't want planting our trees to have a negative effect. So first of all, we plant actually quite far apart. So our trees are planted 110 an acre, which is actually quite a wide spacing, with plenty of room in between for other food crops, for cattle, which some of our farmers do. And about 3 years ago, we formed an alliance with the Soil Health Academy and Kiss the Ground to train our farmers in regenerative agriculture. So we've really got our eye on, not just the trees, but the whole ecosystem that we're planting into. We've got a farmer in Guatemala who's doing empress trees with teak and cedar. The trees also flower in the spring, and they're great for the pollinators. So many of our farmers are getting into beekeeping so they can put the hives in. Now, these farms are 10, 15, 20 acres. As we get into larger projects, which we're now doing, they're fully designed to be full food systems with many different food and non-food crops included. So, kind of almost the opposite of a monoculture.
Mm. Yeah, that's really cool.
Awesome. And then Justin, can I ask you a question?
Bring it on. I'm an open book, baby.
Nice. Well, you asked a great question to me, and I stumbled through the answer of, have you seen the industry evolve? I think you have probably the deepest perspective of any of the three of us on its evolution. I would love to hear your thoughts.
Yeah, I think we are, WeFunder really tries to position itself as a public benefit corporation. We try and eat that dog food, and we're very mission oriented as a company. I think a big part of that is the influence from Kiva, where 3 of our top senior leaders, me included, all were on the same team for Kiva US, launching Kiva in the US. So we kind of see this as a very impactful, long-term, mission-oriented, campaign. The real question for me is how big is this market? And I think that's a question that could be influenced by a lot of different things. If there are regulatory changes and making it a little bit easier for founders to raise on through Reg CF, that would make a massive difference. I believe I take a slightly more in the weeds, granular look at the industry at large, and that every founder that successfully raises and has a little bit more ammo to take their shot, that's 1 inch closer to the goal. And we want really big companies to use it, like Mercury Bank or Substack. Those are big Series B companies where they add a lot of credibility, and hopefully investors make money on those deals. But for me, what I love and what I pursue and what I really care about is the diversity piece, where it's we want all kinds of different deals. We want climate, we want small business, we want coffee shops, we want everybody to be able to utilize this infrastructure and figure out a way to do that scales. Very, very challenging, but very encouraged in the past 5 years. VCs are more friendly towards it. It's more normalized amongst small business owners. It's not foreign to investors. It hasn't been widely adopted, but I don't think it's foreign. So, it's trending in the right direction, and slow and steady and persistent and having a long-term focus, I think really matters. And that's kind of our mindset towards the trajectory of the industry.
Awesome.
Yeah. I appreciate the question. This is a collaborative dialogue. We have 6 more minutes of killer coming at you. And if you do have any questions, please put it in the chat. Kathy, what's the soul of the thousands of investors, the $100 check writer, the little, the opportunity for the small guy to get in? Do you have a specific example or an anecdote where it's like, oh, this is why I'm doing it, and this is what gives meaning, either on an individualized basis or a collective 1,500 people that have written a check on WeFunder and probably many more beyond WeFunder?
Well, some of the ones that I really like are where there have been kids who've been set assignments. So there was one whose dad said, go and do some research on companies doing something for climate. And the kid went and did the research and looking around, and they came back with World Tree and that, convinced their dad to invest. And we've seen a number like that where, and then the investments become a family investment. And if you think about an 8-year-old who persuades their parent to invest, those trees are going to be mature, when they're 18. It's kind of a cool thing to be able to follow the story of the tree as they get older. So those are some of my favorite. I would say that most of our investors invest for both the impact and the profit. And it's a both and. They like the two together. There's very, very, very few that only do it for the money. There are some, but they're quite few. And then there are some that are like, look, I know it's risky. Any investment is risky. As long as I'm having that positive impact, I'm happy with what I'm doing. So we see the full range.
Love that.
Yeah.
Franz, what about you? Leading a platform and having so many transactions and seeing so many different examples. If you gave a cool example at the beginning on the founder side, where it's like, hey, we have this project, I guess founder and investor, because it was kind of contained, and value on the founder side, real value on the investor side, and everyone was interconnected. Could you share another example in kind of through a different lens where it was just like, okay, this is why allowing a unaccredited investor to write $100 check matters. This is the inflection point. This is the impact. This is the nuance of why what we're doing matters and why it's cool.
Oh yeah, totally. Ultimately, I started Raise Green to get more people involved in tackling the climate crisis, and my theory was that if we could use a form of self-incentivization, where you can make a return while they're investing in something that's making a difference, and maybe go above and beyond and be proud of being able to see that project when they walk by the high school, then that will spur more climate actors to come into the space. And that we wound up with about 3,300 investors on the marketplace. We had a community of 23,000 by the time I left, and had raised about $9 million into 40 deals. And 70% of those deals were companies that were led by one or more BIPOC or women founders. So impact was a huge driver, and impact does have a lower beta in some of the findings than investing in traditional assets. So specifically, where I saw that manifest itself, one of my favorite deals as well was working with Block Power, which is a electrification company. They talk about turning buildings into Teslas. They have a very charismatic founder, Donnell Baird, who actually was a champion of change for solar at the White House, which I ran that program. So it came full circle for me from 2014 to 21 when they first launched, and they sold out faster than anyone on our marketplace. We ended up raising well over $2 million for them. But there were scores. They wound up with several hundred investors, and there were scores of investors who wrote to us or who posted and said, I never have made an investment before, but I care about climate, and I saw this, and that was when I knew, I had to put some money in. So that one to me was incredibly uplifting as a founder to see that happen with many, many individuals coming forward and saying it's their first investment.
I love that. Kathy, when are you going to open up the next round for all of us to participate?
Hey.
Yes, coming soon, actually, probably something like the end of May.
Okay, cool. Devin, can we make sure that campaign gets its proper cycle across the good people, the superhumans for good? Well,
we will make sure that we do. We won't ignore that.
Perfect. Awesome. Kathy, Franz, I had a great 45 minutes. That was very fun. Appreciate you being so engaging and interesting and sharing awesome stories. I had a lot of fun with y'all. Devin, thank you for letting me host and moderate. This is my first moderated panel in my career. So it's one that I'll never forget. And I appreciate you for opening the door. Thank you.
Well, Justin, it was a thrill to have you. I know you well enough to know that you are absolutely a natural at this, and you are and were. Thank you very, very much for investing the time to do this so well. So thank you very, very much. And Kathy, Franz, thank you both. And if she's listening, we want to wish Lynn the very best. I know we're worried about her and her family situation, but thank you all. I'm going to take a few minutes now in kind of a wrap up mode, and I do have some thoughts for you, and I ask you to stick around if you would. But let me start by reiterating my appreciation to all of our speakers and all of you who have attended. I did some rough math, and forgive me, but I think our speakers on average committed 10 hours to this, and it may have been 20, but it was at least 10 hours of preparation. We had 100 speakers, so we're talking about 1,000 hours. And, some of these people don't bill their time professionally, but if they did, and many do, the average rate of billing would be somewhere in the $300 an hour range. Some are upwards of 1,000, right? These are professional, wonderful, experienced experts, practitioners, and passionate people who did a fabulous job. I want you to think about $300 times 1,000 hours. Our speakers delivered to you as an audience $300,000 of their time. I get so moved thinking about that. Tremendous commitment. And I have to tell you, the honest truth is, we did not pay one speaker one dime. Not one dime to one speaker. It was all contributed because of the incredible community that we're building here. This is a movement we're trying to build. And I want to thank those speakers for the tremendous time and effort that went into including those in this session. I want to thank and acknowledge you as an audience for coming to learn and to show respect by spending hours and hours. I know some of you have been in these sessions for a total now of 20 hours over the last 2 days. Thank you. Thank you. Your time is valuable. I hope you feel in some way enriched by this experience. I really can't thank you enough. Now, I want to share an experience that I had last fall. Last fall, I was out for a run and tripped over a speed bump in the road and fell and broke my hip. And that experience was kind of interesting. I was, I don't know. The reality was I was in the hospital for about 3 or 4 days. I had to have my hip replaced ultimately. I feel way too young for that, but that was the reality. But because I was a runner, an interesting thing happened. They kept me on a heart rate monitor much of the time to make sure I didn't die. Uh, I guess that happens to some hip patients. Anyway, I was on a heart rate monitor, and it frequently alarmed all night long, all day long. It would alarm. Why? Because I was a runner, and my heart rate was very low. It would frequently drop below 50. So when the heart rate would drop below 50, the alarm would go off, and the nurse would check on me, and I didn't die. And so I share that. Why do I share that? I want you to all to take a minute and take your pulse right now. Do me a favor and take your pulse. There's a point to this here. So do me a favor, check your pulse right now. In the day and age we live in, I know a lot of you are like me. You have a watch that'll do this for you. If you don't have a watch that'll do it for you, do the thing. But let me just check my pulse right now. I'm a little anxious, 72. Sitting here anxious, doing my speech. Okay. Now, have you all taken your pulse? Okay. So here's the thing. If you have a pulse, here's the key thing I want you to know. If you have a pulse, you are an investor. Okay. That's the takeaway. That's the punchline. That's the point. And I know some of you think of yourselves, well, no, I'm an entrepreneur. I raise capital. I don't invest. Some of you are thinking, well, I'm a school teacher. I'm not an investor. I'm a retiree. I'm a golfer. I'm a dad. I'm who knows what. No, you are an investor. Many, many people in this country have a 401k. That is a very sophisticated investment structure. Many of you own a home. That is a very big investment and a risky one. We saw in 2008 how risky it can be to own a home with a mortgage. A lot of people lost their homes in between 2008 and 2011, which is what inspired the Jobs Act, by the way, which is why we're here, right? Because of the Jobs Act. And almost all of us own a car, right? And a car doesn't sound like, may not be a smart investment, but for a lot of us, it's a lot of money. And it is. Anytime you're putting money into a capital investment, how else do you think about it? It's an investment. You are an investor. That's my point. You already are an investor. Even if you don't think of yourself as an investor, you are an investor. So what does that mean? I want you to think about investing via crowdfunding. And I think there are a lot of people in the sound of my voice still who haven't done it yet. So let's start by talking about how small is small. I want you to start small. Investing is something that we learn to do better over time. It takes practice. There is no way around it. I don't think any amount of books is going to make you an expert unless you try it. I've now made dozens of investments, and I feel like now I've got this figured out. I didn't feel that way 5 years ago. Now, I have an MBA from a good school, and I used to run a broker dealer, but I tell you, I have learned a lot about investing from investing, and I want you to do the same thing. So how small is small? I want you to start small. There are a lot of opportunities for you to invest with just $100. And for a lot of you, a lot of us, $100 is smallish. Now, it doesn't feel very small to me. That feels kind of small to me, not very small. And I want you to start very small, right? I want you to try and commit to be very small. But right now, and for a lot of you, $100 is very small. And I get that. Great. There are 344 offerings right now that are live with a minimum investment of $151 or less. So if you are a $100 investor, if that's a small amount of money for you, you have 344 different options. You don't need to take whatever you see. The first option, you can browse, peruse, look for something that really strikes your fancy as a starting place. Now, within that 344, there are a bunch. There are about 8 or 9 right now, this minute, that have a minimum investment of just $10 on a website called SMBX. The company's called SMBX. Ben was on the program yesterday, the CEO. The SMBX.com is the website. You can go there, and they always have their minimum investment is set at $10. So you can go raise there. Now, Jennifer, who's here in the room, I think she's still here. Maybe she left, but Jennifer was from Tampon Tribe was here, and Jennifer raised on SMBX. She did around there. It's a debt crowdfunding site, and I invested in her deal there. $10 is what you have to do there. So virtually anyone can do $10, but it gets better than that. Okay, so you can go to Climatize, and right now, I don't know that every deal on Climatize has this minimum, but right now there's a deal on Climatize with a $5 minimum investment. $5. So, we're talking cup of coffee money here, right? So if $10 is too much, visit Climatize and go invest $5 to make your first investment. And here's the thing. So Climatize, you need an app. So you're going to either download the app to your Android or to your Apple, and either way, and you can invest $5. Now, I couldn't believe it when I looked at it. I double-checked, I triple-checked, I quadruple-checked. Net Capital has an offering right now where the minimum investment is, and I kid you not, it is $1. You can go invest $1 on a Net Capital. I'm not going to tell you what it is. I'm not going to make it too easy. And here's the reason. I looked at it, and so I don't want to be too particular about it. There are a lot of good offerings on Net Capital. I've seen some good ones. I've invested, but this one isn't a good one. So if you do it, I want you to do it for practice only. Invest $1 to prove it can be done. Learn how to do the mechanism, the process. Because once you begin to do it, the second investment is a lot easier. So if you need to invest just $1 to be an investor in crowdfunding deals, go do $1 on Net Capital, but only do $1. Okay. When we talk about small, let me just say, to put this into a little bit of context, I want you to do what is small for you. And one way to think about what is small is something that you could do 10 times a year. So if you can do $100 10 times a year, that's small. If you're really more of a $50 10 times a year person, or $25, then look for these smaller opportunities to invest and go there instead. But whatever is small for you, you do you. But I want to encourage you, no matter how modest your income, to begin looking at opportunities to put small amounts of money to work until you've really mastered the art. After you learn how to do the due diligence and really evaluate the deals, you can start to raise your investment. And that's what I get excited about. So I want to encourage you to commit today to make an investment in one of these opportunities right now. Don't wait. Start small. Start with something that's really comfortable. And if $100 is comfortable, great. If it's not $10, do that. If it's $5, do that. If it's only $1, go find that offering on Net Capital and invest $1 today. Okay. I want to challenge you all to make that commitment to do it. And remember, if you're capable of doing about $100, there are 344 options for you right now, this minute. You've got a whole smorgasbord of opportunities. So I encourage you to go invest. And with that, I want you to take a look at this. And Justin was a little bit talking about where the market might go. And perhaps because he's a WeFunder, he is a little bit timid about saying what the potential is. Let me tell you, I think we are at the beginning of something huge, something absolutely ginormous. And so this is a little tree. Do you know what this is, a little tree? This little tiny baby sapling, it's maybe weeks or I don't think it's months. It's probably weeks old since it first sprouted out of the ground. That little tree is a redwood. And I want you to think about what a redwood can become, what it is. I live here in California now, and I've seen some of the largest trees on the planet firsthand with my own eyes, and they are magnificent. And I'm telling you, that's what the crowdfunding space can be. But it requires us to participate. We have to do it. It has this tremendous potential. I hope you'll join me in making the world a better place via our investment strategies. We can make money doing this. It isn't just about giving our money away. This isn't philanthropy. I think it can foster our ability to be generous as philanthropists by investing and maximizing our returns via our crowdfunding investments. But we are building directly an opportunity to change the world in a way that also helps us. So please, as we conclude today, let me challenge you to join the movement by making an investment today. There's still time left. I know it's 9 o'clock on the East Coast. There's still time to go to SMBX or WeFunder, or go to a website, make an investment. It takes about 10 minutes to pull the trigger. I encourage you to do it. It will change your life. And with that, we'll conclude. So thank you, everybody, for taking the time to be with us. Again, I reiterate my appreciation to all of you. And we look forward to greater collaboration in the future.